Hi, good afternoon, everybody, and welcome to our second in a series of 3 Renewable Electricity Support Scheme seminars that we're hosting in Mason House and Curran together with Electro-Route. I'm delighted to be joined by David McInerney, Contracts and Commercial Manager with Electro-Route. My partners, William Carmody, head of our financial services department at Mason House and Curran, Peter McLay, our energy regulatory partner in Mason House and Curran, and myself, Eoin Cassidy, who's the energy sector lead in Mason House and Curran. So the idea of the briefing today is to bring all prospective applicants and interested stakeholders in the RES scheme through to the next part of the RES process. For those of you who attended our seminar in our offices back in January, we were talking, it was just post the RES terms and conditions being issued, and we were kind of setting out some of the key aspects of those terms and conditions and talking people through what they needed to do to go through that qualification process. We are now following a short COVID-related delay, but we're here far quicker than actually I anticipated at the seminar in January. I thought with the government hiatus there may have been a further delay to this process, but the department has moved forward at pace in the context of all of the hurdles that they've encountered in the last couple of months to move the qualification process on to the point where we have where prospective applicants would have received their provisional qualification decisions by email and notification on the system yesterday evening. So the majority of this seminar is focused at the fortunate applicants who have been successful in that qualification process and who are now moving to formulate bids. But we thought it wouldn't be fair to go through that route without perhaps touching on the options that may be available to people who have received a negative provisional decision from EirGrid in yesterday's notifications. And kind of all is not lost for those people. Those applicants still potentially have an opportunity to participate in RES 1. So I guess we just wanted to flag, the steps that these applicants should be taking at this point in time in following receipt of that provisional notification, and they should be issuing their notices back to EirGrid for a review. They have to issue where they think that EirGrid has perhaps proceeded incorrectly in the implementation of the terms and conditions. The applicant should act reasonably and in good faith and to the standard of prudent industry operators to notify EirGrid that there's been an error made. And EirGrid has a period of time, 10 working days to consider those initial notices and make a further decision as to their view whether they've made an error in their decision or not. And then it does still remain open to unsuccessful applicants at that point to issue a notice of dissatisfaction under the terms and conditions and to go back to EirGrid for EirGrid to consider the notice of dissatisfaction and the reasons set out by the applicant as to why they should have qualified for this process. And EirGrid at that point in administering the auction process will take the notice of dissatisfaction on board and present that to the Minister for a final decision on the qualification. So there's a final qualification decision that is actually finally made by the Minister. In terms of the potential for challenging it, the terms and conditions are effectively sort of silent on the process that happens if in terms of the Minister reviewing the applicant's notice of dissatisfaction. But in our view, this and you wouldn't be able to start a kind of a legal challenge to the decision that's been made by EirGrid until such time as the Minister has considered and made the final qualification decision. which, as you can see, is only the 10th of July. And when you look at the timeline for the auction submission closing date of the 28th of July, doesn't leave applicants with very much time to launch a legal challenge to the decision. And what that legal challenge might look like really depends on the nature of perhaps the potential errors that have been made, either with the process itself or the decision making around the relevant applicant's submission. I would be cautioning and advising any applicant which is in this process to kind of seek early legal advice in relation to these decisions. But I would say that, of course. But I think just given the timelines that are around and the potential remedies available, you really need to be ready to roll by the time you get to that final qualification decision date if you think you're going to have a negative outcome there. On that note, all of the unsuccessful applicants could probably leave the rest of this webinar and hurry off to finish completing their notice of dissatisfaction around the rules. But I thought it was just important to set the scene in that context. Then perhaps for we are moving into the bid phase for the successful applicants. It's not clear at this point, how many successful applicants are out there, and as we all know, the quality of the auction and potentially the price or the quantity of projects which may be successful is going to depend on the final competition ratios that are published. We have a situation where the new Irish government is close to being formed, but there are final stumbling blocks as of sort of yesterday evening, this morning. A major stumbling block remains the Green Party commitment that they're looking to impose upon the government to achieve 7% carbon emission reductions on an annual basis. As a clear commitment from the government with a roadmap of how that's going to be achieved. And, as of this morning, they rejected a commitment to a 6.5% reduction. So they're holding firm on this issue. Whilst this may not fully influence Res 1, you can see, the writing is on the wall in terms of where the Irish state is going in relation to the energy transition, if the Green Party does manage to form a government with the grand coalition of Fianna Fáil and Fine Gael. But stepping back into the T's and C's, David, perhaps you might kind of set out just a couple of pointers around the competition ratios and
Sure.
What happens next in that respect.
Yeah, thanks, Eoin. Yeah, I mean, I guess since we last spoke on this particular topic, there has been a bit of movement, and that movement ultimately is, I suppose, driven by the CRU trying to make this first Res 1 auction as competitive as possible. And on the 6th of March, they submitted a kind of provisional competition ratio to the department. Now, it was based on their own findings, their own estimates of how many megawatts, various technologies that would submit into the first auction. So on the back of that, they proposed a competition ratio of 2, which then ultimately had a knock-on effect in, what was the total capacity available under this Res 1 auction. So, I mean, the headline figure originally on the Res 1 T's and C's was 3 terawatt hours in total to be procured across various, there was a dedicated solar volume, a dedicated community volume. The CRU's provisional number of 2 results in that 3 terawatt hours being reduced to 2.11 terawatt hours. Now, like you said, there was, I suppose, qualification results issued yesterday. In that letter on the 6th of March from the CRU to the department, they do commit to, I suppose, updating their assumptions based on what actually has qualified. So I guess it's something for people who are going into the auction to keep a close eye on, to see if the CRU provide some guidance on when they might issue that, and then of course if there is any significant change to that competition ratio number.
And the expectation is that the final competition ratio will, is going to be published prior to bids being submitted. So it is potentially something we might see within the next 2 weeks, do you think, or is that?
Yeah, I mean, yeah, I absolutely agree. I think it's absolutely important and crucial that the CRU issue this, as soon as possible. It is a competitive auction, but at the same time, people will have to understand what are they competing for. So I would expect that to happen quite quickly.
Okay, and maybe this is a good point to turn to our audience and allow some live interaction on a fastest finger first basis. So we're going to have we're going to have two polls during the webinar, and the first poll is going to come up now in a moment, and it's just going to get a view from the audience whether people think that the final competition ratio is going to be higher or lower or roughly the same as indicated in the CRU's letter from the beginning of March. So looking at an all volume gigawatt hours of 2,112 with 537 gigawatt hours of solar, 14.4 gigawatt hours of community projects as well. So if none of the panelists are allowed to vote, so hopefully we get at least 1 or 2 votes on this in the next moment or two, and we'll see what the view is from the audience. I'm told there's about 200 of you out there, so don't be shy and please participate. I should add, from a housekeeping point of view, we have the Q&A function turned off. We've had a whole series of questions that have been submitted over the last number of days by interested parties, and we've kind of structured the presentations and Q&A for each of the panelists to try and deal with that. So I think we should hopefully we'll get results coming in shortly on the poll. Poll has disappeared. Here we go. So we have 26% people thinking higher volumes, 28% of people thinking lower volumes, and 46% thinking roughly the same volumes. I don't know, to Peter, Will, David, do you have any view on that yourselves? Maybe starting with you, David.
Yeah, I mean, it's I guess from the CRU's point of view, like, they're always, paranoid about, the cost of these things and trying to keep them as competitive as possible. I think, from Ireland trying to meet various RES-E targets all the way to 2030, it's probably an opportunity, lost instead of focusing on, rather than focusing on the sort of potential cost of this. I think we know there's an auction happening. There are certain volumes there. I think there could have been scope to maybe look at, additional volume when we have Res 1. We have a clear line of sight to what it means, how it will work.
Yeah. How about you, Peter? What do you think?
I just think it's interesting that unlike previous schemes where I guess the numbers were presented as the output of a black box, in this case we're actually getting an insight into some of the workings behind how the eventual numbers come out. No, I'm not too sure what those various levers do. I'll admit to that, but I think it is an interesting one of the many ways in which RES will contrast with previous schemes, and of course we're about to discuss a number of others. So that's my only observation for now.
Yeah, and Will, do you think, in terms of there's a sort of a balance there with the government, whether if they go for lower volumes, they'll get a better price probably in certain categories?
Yeah, precisely and as David mentioned, I think a big factor in this is government's focus on best value for the consumer. Obviously there's a requirement to deliver and meet our targets as well, but I think there's a really sharp policy focus on making sure that the scheme as introduced is also delivering competitive energy pricing for consumers as well.
Yeah, and then I suppose if we're looking at at those volumes, and then we're dealing with a pay as bid type auction structure. Then obviously your key cost inputs and the degree of certainty that you have around those cost inputs at this stage is important, I suppose, bearing in mind okay, what in terms of what's at risk at the moment is the original bid bond that was submitted if you don't issue a withdrawal notice, and you decide you're going to go into the auction, your bid bond is in jeopardy. But maybe looking at those different cost inputs, we'll perhaps, like, one of the critical aspects of this is the cost of funds and the financing for these generators and how they're going to build out these projects. Do you have any thoughts around what a prospective applicant should be doing at this point in time, bearing in mind we only have until from getting that provisional qualification notice from now until the 28th of July, when they have to submit their bid?
Yeah, exactly. As I said, whilst obviously construction costs, OPEX, etc., are a big part of the cost inputs into any bid profile, the cost of funding and financing is also a really significant part of that. And bidders will have completed their declarations on availability of funding when initially applying to be part of the scheme. So they will have had some conversations with funders already, but now they're going to need to discuss funding terms and conditions in a bit more detail in order to calculate how those costs are going to influence the level of their bid. It's going to be very difficult for lenders to give a hard guarantee on what the cost of funding might be this far in advance of actual financial close on a transaction. And funders at this early stage as well probably won't have done any level of detailed due diligence on a project. And any indication of loan pricing there, it's going to be subject to that detailed due diligence and also the usual credit committee sign off in the normal way. So the most that a lender is probably going to be able to give a borrower in these circumstances is a non-binding heads of terms. And in fact, it may even be too preliminary a stage to be able to do that. And an informal indication of a likely pricing range is probably all that a lender can give. So I suppose a lot of developers will have existing banking arrangements, and engaging early with lenders now at this stage in a substantive way is going to be important in order to get some certainty around that cost of funding. And developers also should remember that lenders also are going to be dealing with a bit of a rush of inquiries now, probably from those who have qualified now that the clock is ticking down to the auction submission period. So lenders also will have a limit on the resources that they can dedicate to considering funding applications, during this time, even preliminary ones. So I suppose the message is it's going to be important to start that engagement with lenders. The more information that projects can give to lenders or potential lenders will help to narrow that indicative funding range that they will give. Lenders also aren't going to want to give even a legally non-binding on a legally non-binding basis. They're not going to want to give offers that commercially they can't stand over in due course. So in order to do that, they're going to also want to have carried out some level of due diligence and inquiry into the project. So the message really there is to start that process because there'll be a number of aspects to the project that the lenders will want to inquire into. Route to market is going to be one, and some explanation to lenders about what the projects have in mind, whether traditional PPA or possibly also supplier light type arrangements. All of that is going to be a consideration as well. Peter, I think you've been looking at that, and you might have some thoughts on that as well.
Yes, yeah, thanks, Will. I mean, last time we held a similar event, we made the observation that this support scheme will largely preserve some aspects of the structure of the previous support scheme. I don't mean in terms of price formation or support formation. That's obviously very different. It's an option this time around. What I do mean, though, is the structures that are permitted and by which supported projects will get its route to market. And by that, I mean the legal structures that allow the project to sell its power into the market and to be paid for the output. Now, for me, sorry, for those that don't know me, I spend a fair bit of my working day dealing with route to market for supported renewable generators in Ireland. And therefore I've been reasonably closely following this aspect of the RES scheme as it's developed. And what was noteworthy to me early on was that like REFIT, the REFIT schemes that have have just recently closed. The RES scheme inherits the possibility that, or in fact the requirement that a supported project must have in place a power purchase agreement. That might strike some people as a bit strange because the wholesale market in Ireland, the SEM, the single electricity market, doesn't require PPAs, and a generator can turn up and plug and play into that market without any intermediation. But I think the idea behind RES projects requiring power purchase agreements is that, I guess, the market is relatively familiar with the structure, it having been available for refit. The PSO system, which is the wider structure by which government support for all sorts of different types of energy is funneled from the consumers to the projects. That's a structure that's well used to using power purchase agreements. So that really, I guess, that explains the fact that you can still use them. Now, as Will mentioned, there's two main power purchase agreement structures that are currently in use under refit. One is maybe the utility PPA or the arm's length PPA, where the generator sells its power into a utility and receives payment. That's an arm's length basis. There's no need for any ownership links between the two. Contrast that with a supply light model, where the owners of the generator also own a supply company. They set up a supply company for the purpose of purchasing the output of the project. Now, the rules of RES do require that a power purchase agreement be used, but they don't really go beyond that and define a power purchase agreement. Given that the prize at stake in the RES auction is a bit like a CFD, people are wondering whether the PPA could be a CFD as well. Now, I think if you went down that route, you'd be inviting questions at a later stage, possibly from funders and their lawyers. I think probably at this point the safest option is to assume that your PPA should be a contract that contemplates the physical sale and purchase of electricity, and that's what that's what funders will be used to. That's what we think the administrative superstructure of RES is designed to deal with. Now, I know Will segued into my route to market piece in the context of a bid. Will have been talking about the costs of financing that have to go into your stack of project costs, which will inform your offer price. In terms of route to market, I mean, what we've seen in the industry to date, and in the context of previous support schemes, is that either your power purchase agreement counterparty, if they're at arm's length to you, or if you're using a supplier light structure, you'll probably need a trading house, someone like Electroroute, to manage some aspects of the interaction between your project and the market. In particular here, I'm thinking about balancing risk, which I know David will come on to. That's the risks and financial downsides thrown up by the way the single electricity market operates. Now, certainly under refit, we've seen these risks and these costs being converted into a per megawatt hour amount, which a generator would typically see deducted from its power purchase agreement revenues. So I guess at this stage, at this pre-bid stage, projects would want to be thinking about, firstly, how will they structure their route to market? Secondly, if they've identified a counterparty, either to purchase the power under a PPA or to manage a supply light structure for them, they'd want to have some idea as to what those per megawatt hour fees might be. Now, those fees have been a bit turbulent over the last couple of years, mainly because Ireland was busy digesting a new market structure in ISEM. ISEM went live in late 2018, and I think it's fair to say that there was a bit of uncertainty before that as to how volatile underlying wholesale prices would be. But I think we're now at a point where things have settled down. Market players are relatively comfortable. They understand the dynamics of the market. Probably relatively comfortable that even with the additional volumes that are going to come through from RES, they can still predict what some of those pricing dynamics will be. And again, I'm sure David will come to this, but there should be some expectations forming as to what those per megawatt hour bids or prices might amount to, and that'll be important for assembly into your offer price. So that's all I have to say for now on that, Owen.
So, like, I mean, it's a good opportunity to put David on the spot then, in terms of giving some degree of certainty to prospective bidders around those type of costs, that, you know, the variables that Peter mentioned there, and also the different types of structures. So I don't know, David, if you want to touch on that and give us your experience, and also I think maybe if you want to kind of touch on other kind of key aspects of the market that bidders really need to be conscious of in preparing their bids for submission.
Yeah, sure. I mean, you know, now let's say, you know, you got a notification yesterday that you're successfully qualified. I mean, the focus, you know, certainly for the route to market piece is, you know, in my mind, you know, you're looking for a competitive product. You're looking for term sheet, probably to Will's point at this point in time, you know, non-binding. I think from an electrode point of view, we're probably happy to do both, even to commit to a firm pricing piece, you know, to provide that certainty to developers as they go into the auction. You know, from speaking to various people, I think, you know, having that certainty is key. There's a hell of a lot of other aspects of RES, not just the route to market, that are far from certain. So if you can, I suppose, nail down one element of the overall input into your bid, you know, from, like I said, from an electorate's point of view, we're happy to speak to both. I mean, you know, traditional PPA, you know, supplier light, these are all fairly well-known avenues. RES, like Peter alluded to, has sort of copied what refit is like. I think, you know, the sort of elements of RES that make it a little bit more complicated or a little bit different from refit that people should be considering. I mean, like you said, it's pay as bid. So in theory, each successful project in the auction will have its own unique strike price. Practically, what the PPA might look like is certainly a euro per megawatt hour, or potentially a percentage discount off that strike price. And that would be, you know, I guess a fee that would be charged either for, you know, depending on the structure. You know, elements that people should, like I said, they should be thinking about is, for example, where is the asset located? What sort of loss factor they have? Under refit, they didn't really need to consider that, because refit, you know, compensated you for the greater of your volume at the wind farm gate or your volume at the trading boundary. So that's certainly something that people need to look at. It was very welcome, I think, that in the RES T's and C's there was an element that sort of pointed towards compensation for curtailment. So, you know, I think based on certain reports from EirGrid for specific, whether it be solar parks or wind farms above 10%, they were going to get some assistance and compensation, which the RES T's and C's actually outline would be funded through the PSO. Whether that 10% is enough, I'm not too sure. There's certainly, in parallel at the moment, there's a clean energy package piece that we'll touch on later, but it's a nod in the right direction, but I'm not sure if it goes far enough, I think is the point. The reference price, of course, is key. It's the day ahead price on an hourly basis. In refit, with the decision, in 2018, we had that blended reference. So that's also, I guess, a consideration. The other one that probably jumps out is the negative prices. So again, back to the point where the government are trying to design a support scheme, to probably mirror what we see in other jurisdictions that we trade in electorate. They won't provide support for negative prices. If that's the case, the support falls away. So, from our point of view, I would see us certainly taking that risk onto our book as part of whatever structure, PPA, electorate PPA, supplier light structure. I think we're best placed to manage it. I think the market, the introduction of ISEM has transformed the energy market in Ireland, obviously, and with RES projects, there is now no incentive to be exporting if the day-ahead price and other sort of auction windows throughout the day are negative. So that is a big change, and that has knock-on consequences then for, I suppose, operation. It has knock-on consequences for EirGrid in terms of their dispatching tool for both wind and solar. Like, you know, these are all new elements to the market that need to be solved. You know, from various calls I've been on, a solution probably isn't there anytime soon. But at the same time, you know, I think that, you know, that negative price piece, you know, we are best placed to manage that, and certainly that's the approach we're taking to RES.
And Peter, I mean, David,
sorry, on just on the negative price bit, I just wonder, is it useful maybe just to illustrate that?
Yeah, I have the slide up there now, if that's showing on the is that showing for you, David?
Not just yet. I can speak to it, anyone. I suppose, look, you know, when you see negative prices in a design of a new support scheme, you know, you don't really think about it too much until you see it actually happening in the market. And I suppose if you look back at I think it was the 23rd of May, I suppose exacerbated by the COVID restrictions and a complete, you know, change in, you know, electricity demand in the country, we did see a record negative day ahead price. So it was circa minus 10 euros per megawatt hour on a sort of a base load average for the day, which is, you know, unheard of maybe even a couple of years ago, right? The same in UK, the first time ever that, you know, or in GB, I should say, the first time ever that the day ahead price for the day was negative. So, you know, these sort of events are happening today, and, you know, it is timely, I suppose, that if you had a RES project operational, you know, on the 23rd of May, you would certainly not be looking to export during those periods because there's no incentive to do so. But
yeah, and the extent of the engagement. Sorry, just the slide is showing there, David. Just it might not be coming up on your screen. Hopefully,
sure, yeah.
Hopefully the audience can see it. But the extent to which that can be managed by EirGrid and kind of agreement on that, is that still some way away from being concluded?
Yeah, I think so on. Yeah, I mean, there's apparently a lot of systems changes needed within EirGrid to facilitate this. You know, if I was put a timeline on it, it's probably a minimum of, you know, 2 years away. I would say 18 months to 2 years. But you know, it's certainly required. It's certainly moving the right direction, and even, you know, outside of RES, I suppose for other participants in the market who have, you know, out of support projects, again, there's no incentive for them to be exporting at the moment. So it's not a specific RES requirement. I think it'll be an industry-wide requirement, even for the first of the Refit 1 projects coming out of support. You know, they'll be in the similar boat to RES projects at that stage.
Yeah, and I mean, we've sort of been in that market change position before. So I mean, Peter, in terms of things that people should be thinking about when they're looking at negotiating terms on their PPAs for the PPA process, you know, what type of stuff should be putting up and flashing lights for them in those negotiations?
Yeah, well, as I mentioned, I guess the previous big bang change for the Irish wholesale electricity market occurred back in 2018 with the introduction of ISEM, albeit that had been flagged and developed and delayed many times over many years prior to that. In fact, I think fair to say that in the years leading up to ISEM go live, one of the factors guiding parties in choosing whether to sell their power to an unrelated third-party utility or to go down the supply light route was, how easy will it be for me to renegotiate my PPA when ISEM comes, as I know it's coming, and given that ISEM will have all sorts of new financial risks connected to it. Now this time around, I'd like to say the sailing is slightly plainer, but in fact we do know that there are maybe you couldn't call it market change, but there are regulatory changes that we do know are looming, and this time around relate to the clean energy package passed by Europe last year in a number of different legislative instruments. Now, it doesn't promise as fundamental a change to the wholesale market as ISEM did, thankfully, but there will be a number of elements that I don't know whether you call it tweaking. It's probably more significant than tweaking, but things like David touched upon the fact that the RES rules talk about curtailment. Now, in fact, the RES rules talk about curtailment to the extent you're not compensated by another source. One of the strands of the clean energy package implementation is talking all about the same kind of area, and that's compensation for redispatch. Now, as it stands, the rules of RES, they kind of leave open the possibility that a project may be compensated in future for curtailment. But it is a regime that's going to need to talk to whatever clean energy package regime is settled upon by the regulators. Now, would that by itself, would that uncertainty be enough to drive you down the supply light route just so you're fixable? Maybe not, but what you do need when you're thinking about the terms of a PPA this year for the purpose of RES is at least the treatment of that kind of issue, a known issue that we know will be resolved, treated in such a way as doesn't back the generator into a corner with its off-taker. We just need to look around the corner and make sure that, well, like negative prices and like compensation for dispatch down, whatever terms of a PPA you strike, either at heads of term stage or at final executed document stage, the terms are suitable and they're suitably forward-looking, and they preserve the interests of the generator.
I suppose one other thing, Eoin, I suppose is worth mentioning. It's just in relation to comparing it to the RES scheme to refit. RES is a two-way feed-in premium. I think they describe it in the document. So there is a scenario, I guess, where the cash flow is a little bit different under a RES agreement. The scenario is that the CRU forecast a market price of, let's say, €30 above your strike price. Under, I guess, the design of RES, the off-taker or that supplier light structure entity would have to pre-fund that. So pre-fund that €30 per megawatt hour difference, for example, in advance of actually earning that revenue in the market. So it's just another quirk, I guess, of the design that is probably worth pointing out. And
like from a working capital perspective, I mean, that is much higher than the pre-funding that was required for refit projects. So maybe a question for Will from a financing perspective and structuring, say, a supplier light model on a project finance basis. Does such a significant working capital requirement rule out supplier light from a PF perspective?
I don't think so. On the requirement for this working capital requirement, it's not unlike that which arose previously under the refit supplier light structures. The funding requirement here is I suppose it's essentially a liquidity requirement, as opposed to do with a cash flow issue as opposed to a capital requirement. So with some good financial structuring, it should be possible to put a financing solution in place to manage this. Ultimately, the project is going to be made whole from the market for its bid price. So it's a question of managing that short-term liquidity requirement during that period. So, it should be possible to put working capital structures in place as part of a project financing arrangement. But actually going back to our earlier conversation, the point here is that bidders would need to, at this point, identify if they are going down that type of the route for that structure. They'll then need to factor in the additional funding cost of that working capital requirement as well. So again, just goes back to trying to work out at this stage as much of your structure as you can in order to factor that into the cost then.
Yeah. And that kind of brings us on to, to our next our next poll for the audience. So, I mean, what we're hearing is in relation to the financing. There's no sort of legal and contractual certainty in respect of the cost, but people will be relying on strong commercial relationships that they would have built up with funders and an understanding of those projects to price those costs. And from the offtake position, David's saying, depending on the structure and approach you use there, it sounds like off-takers are, willing to try and agree and set costs prior to the bid submission. And I expect that, from the other major cost inputs, which I suppose are potentially unknown until contracts are being signed, such as balance of plant and turbine supply, that again, you'll get the same commercial engagement from counterparties who are keen for business. But perhaps, contracts won't be fully locked down. So if we could put up the next poll just to get a view from the audience around this. So this is just to ask the audience whether, whether you think in respect of your project costs, or perhaps where you're a funder, prospective applicants' cost base, would you expect them to have firmed up by way of binding legal commitments with counterparties prior to the Res 1 bid submission on the 28th of July? So is it under 25%, 25 to 50%, 50 to 75%, or over 75%? I should probably do the countdown music. Can anyone do that while we tick the clock down to 1 minute? I think that the poll is up there for people to submit their vote. I think what will be very interesting is the where you don't have the binding legal commitments in place on both sides, and the exclusivity is. Here we go. So the majority are saying less than 25% firmed up by way of legal binding commitments. 25 to 50, so 20% think it'll be 25 to 50, 28% be 50 to 75, and a very optimistic 10% think over 75% of the cost base will be firmed up and by way of binding legal commitments. So I think if you take the majority of of the audience's view on that, what you are looking at is post-bid success leading to a great horse trading bonanza between all various counterparties and contracting parties, whilst people are getting ready to enter into implementation agreements. So I suppose what we're looking at there is people pushing down, likely to push and long finger contracts, even contracts which could be drafted on conditional upon success until they have an outcome of the bid process. And that might be indicative of some of the applicants' views around what they want to do with their projects if they are successful in the auction process. And I think there's certainly in some with some of the developers, I suppose, there's an expectation that perhaps post success in the bid may be the best time upon which to go out to market to look for investors and funders for their developments prior to entering into the implementation agreement and posting the sort of the more onerous performance bond requirements. So I suppose maybe just looking at this very briefly, I think the intention for this seminar is not to drill into the implementation phase in great detail at this point. We'll leave that to the third RES seminar that we'll host towards the end of the summer. But perhaps, Peter, you might, at a very high level, just kind of set out some of your thoughts around, what happens if you are successful with your bid, you receive an offer, and the next steps that you have to take in that respect, and things you should be aware of.
Yeah. Well, things start getting serious fairly quickly at that point. You've posted a bid bond already. That bond requires, I mean, in order for that bond not to be at risk, you need to then, if you're successful in the auction, follow through with entering into an implementation agreement and then posting a performance bond for development, which I think is 25,000 euros per megawatt. So it's a significant commitment, and that's required shortly after the results. I guess what I was going to mention, though, I suppose, was that it's heartening to see that I guess the implementation timetable in terms of that slide there hasn't moved. Eoin mentioned earlier that the earlier phases had unfortunately been delayed by a month or so due to the movement restrictions in Ireland. For now, the implementation phase deadlines haven't changed. I guess, though, we can't rule out the possibility that that elements of the timeline may change. And I'm thinking here in terms of state aid clearance. To my knowledge, the scheme hasn't yet received state aid clearance. There is preserved in the rules of RES the right for the scheme to be amended if required to take account of state aid clearance, and that would obviously include things like a deferral, or should that be necessary. You know, who's saying that it will be? But also, of course, the scheme, the awards can't be made pending state aid clearance. Yeah. So I guess we still have to wait for that. We'll see what consequence, if any, that has to the timelines.
And then you do have, I suppose, in looking at that level and degree of uncertainty in relation to potential changes to the T's and C's that parties will be bidding against. Depending on, I mean, they have telegraphed the potential for the amendments to the T's and C's to deal with state aid issues, but there had also been sort of rumours circulating in the market around potential changes that perhaps could, deal with the indexation issue or potentially deal with some certain program issues as well, linked to those implementation phase timelines that you indicated. I mean, any amendment to those would have to be done very carefully, I think, by the department in order to avoid circumstances where people who had not applied to qualify because the timelines were too aggressive in the implementation phase, or parties who have priced on the basis of the implementation phase timelines who are unable to, and then are unsuccessful in the bid. It strikes me that, those types of changes would need to be very carefully done in order to avoid potential legal challenge to the process.
Yeah, like any public authority carrying out its administrative functions, I guess the TSOs and the department in sponsoring and running the scheme have to take a lot of administrative law obligations in mind. Now, admittedly, the avenues for a disappointed or a challenger, the legal process can be fairly slow and unwieldy itself. So I guess that, and the fact that there will hopefully be further res auctions coming down the line, I guess means that the wait till next time approach is probably more appealing than it would otherwise be.
Yeah. And so Will, as Peter mentioned, you'll have the, upon, successful outcome in the bid, you have effectively 30 working days to sign up to the implementation agreement and post the performance bonds. That's obviously too quick to go through a project financing process for any bidder who needs additional financing support for the posting of those performance bonds. So what kind of options might be available there?
Yeah, exactly. On like the level of bonding required there is going to be quite significant at 25,000 per megawatt. That's going to be in the high six figures or maybe even seven figures for large projects. And as you say, it has to be put in place quite quickly. Within 6 weeks, 30 business days of successfully being awarded their prize. So, again, it goes back to, the amount of work that maybe will have been done in advance by developers with funders as to what type of bonding facility could be put in place. One thing that struck me actually about that poll, the last poll, I think it was 10% only of applicants felt that more than 75%, 10% of attendees here felt that more than 75% of their project costs would be locked in. What that suggests to me is that in that scenario, there's a high level of risk for those who have posted bonds but have not been able to lock in the prices that, the costs that input into those bid prices. So in that scenario, there's very high level of risk that those bonds will be called upon if they can't proceed, if they can't actually achieve the costs that they assumed that they would, but hadn't got legally binding commitments on when they were putting in their bid. So you may be able to, depending on the level of the advanced level of due diligence that lenders have done, because you may be able to fold a bonding facility into a project finance facility at that place, because at that stage you will have a project that has been awarded, has got a res award at that stage. So it's taking on the characteristics then of a financeable project, and it depends on how advanced due diligence is at. It's unlikely, as you say, to have reached full project finance financial close within the 6 weeks. If it was lucky enough to do that, you could possibly put your bonding facility in place in time under the project finance facilities, but that's unlikely. I'd say that would just seem to be too challenging. So in that scenario, you're going to have to look at alternative collateral, alternative security, probably outside of the project for that period of time, and you maybe then be able to replace that with something under the project finance facility subsequently. But developers are probably going to have to be ready to collateralize those bond facilities with something in addition to their project in order to be able to get it in place in time.
And then there's also, I suppose, the potential M&A activity that may take place, post successful outcome on the bid in relation to the bringing in of new investors, or potentially different types of funders with sort of MES type instruments to provide that, to provide the financing for those bonds in the short term.
Yep, absolutely.
And David, in circumstances where you haven't locked down your pricing, are you looking forward to, frantic negotiation with counterparties over the course of the end of the summer?
Yeah, I've cancelled my holidays which is quite helpful. Yeah, look, I mean, I suppose our approach to it is to try and be flexible and to see what, people want, what developers would like. I think to date, I think you're right. I think the vast majority of the activity will happen post-contract award. I think, the discussions I've been having at the moment with developers are, if we were in a position to contract, where is that pricing level? I think, to give a bit of insight, I suppose, if you were to compare it to the reference price, so the reference price in res is at the day ahead level, there was the blended, that blended 80-20 for large projects, 70-30 under refit. The pricing level is probably higher than refit projects for obvious reasons, and it kind of comes back to, what is the cost of balancing against the day ahead price, and I guess there are, I suppose, variations on that depending on the structure. But like I said, we're at the moment providing term sheets to different counterparties. Internally, I suppose from an electorate standpoint, we are, I suppose, trying to put in place flexible and attractive competitive terms, and all the time, with a view to, it's a market that never sits still. You have clean energy package, you've lots of other probably consultations coming up that don't get the same airtime. But I think it's when it comes to contracting, I mean, I think, you're looking for a counterparty whose transaction risk is low. The creditworthiness piece we've spoken about, and I guess, Mitsubishi are fully supportive of what we're trying to do. So, I absolutely agree. I think, Q3, Q4 this year will be a very busy time.
Yeah, and it perhaps might be worth just flagging for the audience the change of control restrictions that apply during the bidding phase expire following. And Peter, correct me if I'm wrong. I'm probably going to get this wrong in the T's and C's, but they effectively expire following submission of your bid. For res, and you're no longer sort of then kind of caught in the you know, in relation to those parties which you've identified in your qualification declarations.
Well, if your ownership has changed between qualification, application, and bidding, you just need to update EGRID alongside your bid with an updated list of owners. Yeah, that's the story there.
Yeah, like all of those transactions can take place free of any pricing information guilt post bid submission.
That's true. Yeah.
So we are unless either Peter, Will, or David have any further comments to make, I leave you if you want to make any final comments. I think we're coming to the end of the 1 hour slot. So I will take that as a no. I would just like to thank all of the attendees for joining the seminar. I kind of expect that our third one, which will third seminar will take place in September, following the auction process and prior to entering into implementation agreements. I'd like to say it might take place in the office, but I think it probably will be another remote webinar type event. I may have shaved by then, and I certainly will have got a haircut. But I thank everyone for joining, and particularly want to thank David and Electra Root for participating in the seminar, and for Will and Peter to join. I hope you found it interesting. And if you have any questions, I suppose actually please feel free to email any one of us, and we'll be sure to respond as soon as we can. Thank you very much.
Great, thanks, Eoin.